gonna be an easy day, man. It's October 30th, you know, the day before Halloween. I work all Halloween long, starting at 10 a.m. to, 10 p.m., something like that. So since I only work in the morning today, man, like after work, man, I'm just gonna take a nap. Like sleeping, dude, is gonna be at the top of my to-do list when I'm off of work, because it's getting ridiculous. Like, I got a good amount of sleep last night. I got off of work at 9 o'clock. I did that whole costume shenanigans, so I ended up getting home around 10:30. But Margin Call to Millions, man, episode 3. This is just gonna be some reflective states, man. Like, I'm getting ready to work all Halloween long, so that's gonna be a fun episode for just Halloween, man. But for episode 3, I'll do a little bit more Bible study today, man. I'm gonna read some more scripture when I get off of work. So that's just gonna be it, man. When I get off of work, I'm gonna try to honestly eat some more fried chicken today, man, from Cane's. As long as I'm working these days at Cane's, I'll just be eating their free food, honestly, bro. So I'm just gonna be taking advantage of the free food that I can get my hands on. So yeah, man, that's the plan for today, man. Get 6 hours of work right now. Afterwards, I get a grub. I'll grub up, get home, clean myself off, and hit the sack, man. So I'm gonna try to fall asleep around like 6 o'clock p.m. And whatever time I wake up, I'll just read some scripture, then try and get some more sleep, because I know I work all day Friday. So yeah, man, like sleeping, bro. Like if I gotta just work, and if anything, I gotta be texting my family more too, man. I'll instead of because I was complaining about being sad that I'm going into work all these days now and in the future to pay off my debts, and how this is going to be my reality for the time being. One of the reasons why I was sad is because I wanted the money so that I could be there and spend time with family, man. But it's like I'm not really texting my family members as much as I could have or want to, So I'm gonna take that upon myself, man. Just try and reach out to some family members through text today, man. Go ahead and do that. But I'm almost at work, man. I wish I didn't hit the snooze button on my alarm 2 times this morning, or else I could have gotten to work 5 minutes early. But hey, man, at least I'm at the front of this red light. So yeah, man, I'll probably see y'all after work, man. 6 hours from now. Yo, DuzyDusty. Back on camera, man. I got off of work just 2 hours ago, on the dot now. It's a little bit after 6 p.m. where I'm at. And so when I got home, I just got a quick little workout in outside. I just did some sprints and some body weight squats, type stuff. So yeah, man, I got showered off already too. So this is pretty much it for the vlog, man. I work all day tomorrow. Tomorrow's Halloween as well. I go into work at 10 a.m. But I work at both of my jobs too, so I'll be really just working all day. So since I work all day, I do want to get some good sleep tonight. My plan was to kind of just fall asleep really right now, man. Fall asleep as soon as I get home. That way, if I wake up at a weird time, I could either just sleep more, or I don't know. I just think that prioritizing sleep right now is important. But I don't know, man. I was trying to link up with some friends. There's a Thursday night football game on tonight. That'll be on in about an hour. So honestly, man, I think the move for me now to end this vlog is to set an hour
alarm, like an hour timer, and just straight back test, man. Straight collect data. I'll always just look at the market. I'll always just look at the price of gold. Um, I kind of want to start trading the forex pairs again, like Euro USD. I do want to get more involved in trading that, so I want to check that a little bit more. Um, but as far as collecting data goes, I've been kind of collecting data on the dollar index, the Dixie. So I'm just gonna continue to collect data on the Dixie. Um, and I like doing that because in my mind, I feel like, well, if I track the Dixie, I can use the information that I collect from watching the Dixie and use that information to make trading decisions to when I trade um, commodities, or if I other instruments. That's the word I'm looking for. Because for example, if the Dixie is bullish, then that could be a sign to look to short sale the Nasdaq, for example. And I think that's a good trading idea because if the Dixie goes up, that means the US dollar increases in value. So if that increases in value, I believe that the demand for the US dollar goes up. So since the demand for the dollar goes up, um, that might be a risk off scenario for large institutions and investors. And so since it's risk off, they would be looking to sell stocks and buy currencies, specifically the US dollar, should the Dixie go up. So right, if the Dixie goes up, you would want to see commodities and gold go down. And then if the Dixie goes up, like something like Euro USD will go down. The dollar Swissy should go up, right? So yeah, man, that's just what I want to do, and that's how I'm gonna end the vlog, man. Today's a simple vlog, episode 3, margin call to millions. Um, you know, it's not gonna be a crazy big backtesting session, but I think me backtesting on YouTube should be good because I might get some feedback. The stuff that I look for when I backtest is stuff that like I would watch when I used to watch Inner Circle Trader on YouTube. But I was really, even though I've been trading for so long, um, I went and put myself through Inner Circle Trader's 2018 course specifically. It's a lot longer than his like 2022 course, 2023. I haven't seen any of ICT's newer courses. I just stuck to 2016 or the 2018 course because I'm like, I know people were making money off of trading ICT concepts, so I'm like, well, I'll just start with his OG content because sure, he might have better content now, but I don't know, man. I just was attracted to his older YouTube videos, and so it's weird, man. In his 2018 content, I don't know. I'm at the point now where I just don't want to watch other people's YouTube videos and how to day trade. I'm like, it's a waste of time, man. Like, I know what I need to do now, which is just collect data to support my trading plan. Um, But it's like, there's because ICT had like the longest video is just filled with like good information and like redundant stuff. Um, it's kind of showing in my back testing. I feel like I'm uh, kind of suffering from analysis paralysis where I'm just looking at too many things at once. And because I'm looking at too many things, you know, it's just not translating right. But so whatever, man, I'm going to continue doing what I'm doing because if I do it every day I should only get better. So yeah, man, I'm just going to put my camera up for an hour and just straight back test, man, see how much because then I'll know for sure how much 1 hour would do. And 1 hour now, yeah, I've been backtesting. Yeah, I've been trading for so long, but backtesting and collecting data is one of my biggest weaknesses. So at least if I record myself doing this back testing for an hour, it's kind of like it'll kind of be like film study. You know what I'm saying? When I played American football, um, my high school coaches would record the team practice, and they would watch that film. And watching film, watching yourself doing things, like you can see where you slip up. You know what I'm saying? You can see where you can improve on. So that's exactly what I'm going to do right now. Um, so if I set my thing for an hour timer, I'll have the whole football game to relax and chill to. And hey, man, I should honestly, bro, I should back test for hours on end, right? I should sure put the football game on in the background, but I should also do more back testing too. You know what I'm saying? Like, especially because tomorrow I'm working all day long. I'm not It's hard to make the time of day to back test, man, especially when you work all day. Like, I still want to, try to spend time with family and all that. But, you know, I'm going to see. I'm just going to do it, man. It's no point in talking about it anymore. I'm going to I'm going to turn my computer on right now. First thing I'm going to do, man, forget the video games. I'll do that. Who knows, for now, it's time to back test, man, and collect data for an hour, man, at least an hour. So let's go. All right, I got my camera going on. Shoot, man. All right, yeah, man. I'm using my freaking phone for. Yeah, I'm using my phone as a face cam right now. It's cool, man. It gets the job done, but here we go. I'm gonna screen record too. So I'm trying to see. Okay, yeah, there's a timer going, so I can see how long. But I whatever, man. I'm trying to do this for an hour, so let's just go ahead and get to it. There we go. All right, so yeah. So yeah, right now I'm collecting data. Like, I have my method of entering the market. I have my method of entering the market here on gold right now. Let me go on the 5-minute time frame. So I started writing this down. I remember, yeah, this is a little bit after my birthday here, where I started to do this little doodle on gold. And then here's a spot where I kind of collect data. Like, it looks interesting. It looks detailed and specific, but like I said, man, there's a lot of stuff I'm kind of recording. A lot of this stuff, I don't know if it's that important, but you know what I'm saying. It is what it is, man. I'm gonna just go ahead and get back to it. So yeah. All right. So right now I'll just catch up. I'll just play catch up, man. I got just about 2 weeks worth of I've been writing down. I'll write down the daily range, how many points or pips an instrument moved in a day. In the span of 24 hours too, like when I look at the market, I look at the market in Eastern Standard Time here in the US. So a new trading day starts at midnight Eastern Standard Time. And that's 11 o'clock in my local time, because I live 1 hour difference from Eastern Standard Time. I'm in the Chicago time zone, Central Standard Time. Whatever, man. So here we are on gold. So here's something significant. We see this big drop right here in gold. You like this? We haven't hit it, man. We've been dropping on gold pretty good, man, recently. Awesome to see as a US dollar enjoyer. But I mean, the trader in me really wants to just start trading this shit, whatever, man. So we have all-time high in gold. We've been setting all-time highs all year long. So we set an all-time high, big dip, whatever. We recover, go even a little bit above it to really set an all-time high on my birthday. So that's cool to say. I mean, my birthday, gold was the highest price it's ever been. Uh, so whatever, man. What the heck ever. But so here we go, man. So after my birthday, October 20, gold did this little drop for, really about 2 days. It's been dropping. Um, but whatever. We have a swing low right here, big drop again. Here's a clear swing low with a drop lower to go below that swing low. However, after this swing low formed, you get a move up to clear a swing high right here. Whatever, man. So, uh, I wrote down here, should you start looking for buys now? Yes, but you need to manage your risk. I mean, you like the answer of should I short here, should I buy here? Like, you want to have data to support why you choose to go short and long, and that's why I'm using collecting data. Like, I want to have this data to support, like, I, it, my vision is I want to collect data so that I could say, like, hey, there's, according to what I watch, there should be about a 60% chance that, taking a long position will work out here. um, I'll see if that like actually happens. But so what I like to do though, how I like to enter the market. Let's go on the 5 minute time frame because I like wrote this down a while ago. Yeah, it's a lot more clear to see. So, should you start looking for buys now? Yes, but you need to manage your risk, and it's good to manage. It's good to start looking for buys because on the hourly time frame, you have a clear swing high up here and a clear swing low down here. So you could kind of say, okay, this whole area is our trading range. So if you just draw like something, I mean, this is super simplistic, but it's like this is like a foundation of my trading strategy. So here's the Fibonacci. Right here is the 50% level. So ICT teaches everything is fractal. So what we do here, like this is like big time frame stuff, but we can also do the same thing right here on the 5 minute time frame. Um, this is just a quick example, just of drawing the fib because everything's fractal. Okay, clear swing high right here. Let's use this swing high. No, let's use this swing high because I consider this one an intermediary swing high because you got this is a clear swing high. You got a swing high right here and a swing high right here. So there's two lower swing highs on each side of the swing high right here. So this one's intermediary, and this one is also an intermediary swing low because this is obviously a swing low right here, but on each side of this obvious swing low, what do you have? Another swing low right here on the right side of this. On the left side, you got a swing low right here. So hey, you could also do this one. This one's an intermediary swing low because you got a swing low right here and you got a swing low right here, and this is the swing low that's in the middle of it. Okay, but we're just doing this because the main thing I was trying to show is this 50% level. So okay, if this Fibonacci that we drew right here is our trading range, below the 50% level is a discount, and you should look for buys and discounts. And should price be above that 50% level, it'll be in a premium. And so premium is expensive because it's on the higher end of the trading range. So since it's expensive, you should look for sales. It's just as simple as that. So, and I'm going to base my trading strategy off of this. I like Fibonacci's. So yeah, recording data, testing out Fibonacci's, man. I'm just going to do that. I like the Fib. I mean, I know how to trade, man. It's just I just gotta lock in on my risk management. But not only that, I do want a clearer trading strategy because I more or less would just enter the market at my free will. But I allowed myself to enter the market at my own free will because I had an idea of what I'm looking for. And This is what I look for when I look for trades. She's are looking for buys now. Yes, manage your risk though. Um, I told myself I wouldn't look for a buy right here. Not at 5 a.m. So at 5 a.m. Where's 5 a.m. All right, here we go. So I could have bought right here. Like, yeah, so you had the big drop. Why did I want to buy at this level? Because here was a swing low. It's intermediary swing low too, man. Swing low on each side. Intermediary. So after it cleared it during Asia session. This is 8 p.m. Eastern Standard Time. And it had a big uptrend after that, man. So it dropped. It was dropping during Europe. And look at this drop, man. This drop is quick and it's fast. And that looks scary. And when you see this, you're like, wow, it's going to just continue to clear through this low because look how fast it's going. No, not all the time. How I see this is, hey, price is going down to quickly offer price at a certain level, and you just got to have the guts to buy it before it should eventually go back up. You know what I'm saying? It's less of how things look and more of just depending on the data, man. And I want to use this data. Shoot, man, I'm already a couple minutes into documenting and I'm already not collecting data. But it's clear, man. I'm kind of laying out my trading strategy here. So I said I wouldn't take a buy at 5 a.m. Eastern Standard Time because this bullish fair value gap was not respected. But I don't know, man. I kind of don't care about respecting fair value gaps. If I want to buy, I'll just buy it. But whatever. So at 5 a.m. though, man. So like, yeah, man. You have this big drop down, but then you got to move up right here. So it's like, do you buy this fair value gap? So I don't know, man. You could set like. So you gotta swing. So yeah, man, I wouldn't buy it because what I want to do is I want to see a 3 candlestick formation and then I'm looking to buy after I see this 3 candlestick formation. The 3 candlestick formation that I'm referring to is a swing high, swing low. So, so here, let's just zoom in a lot. So you have this candle at 4:10 a.m., 4:15 a.m., and 4:20 a.m. This 3 candlestick formation creates a swing low. Since we created a swing low, after we took out a swing low, we can look for buys. That's my trading strategy. But do I want to look for buys? I don't want to because you have this third candle to complete this swing low. The candle afterward is a down candle. It didn't go above the previous candle. And then the same thing with the other candles. And then not only that, but we formed a bearish fair value gap. And we tap into this bearish fair value gap here. And it kind of respects it. Like it wants to continue bearish structure. But then, I don't know, man. Bam, we clear the swing low right here. Bam, it's 5:20 a.m. Honestly, it's probably just not a bad time because with the time it is, I feel like you're better off just waiting until New York open. But whatever, man. The trading strategy is we got to take out a swing low and then let's go in the smaller time frame and look for a swing low to form and then buy after that. So we have a swing low right here. Here's our 3 candlestick formation at 5:15 a.m., 5:20, 5:25 a.m. This is our 3 candlestick formation. And then this candlestick, it goes above this previous candle. So honestly, I don't know. Do you want to buy right here? Sure. Let's put a limit order below this candlestick and then protect ourselves right here. But you would have got taken out right here. So I don't like that, man. Honestly, right now, dude, if I'm not like, just don't even trade at 5 a.m. You can because, and I liked to do it, man. I did it before and I made a lot of money doing it before because in my opinion, I can see highs and lows form in a trading session at that time. So, I mean, but honestly, with how much experience I have now, I just think that it's not worth it. I think it's more worth it to wait until New York Open. So let's wait until New York Open if we want to buy it. So let's go. Okay, so 7 a.m. right here. 7 a.m., man. This was the second candle. And then 7:05 completes this third candlestick formation. We have a swing low right here. The next candle is a bullish candle, bullish candle. I like to put a limit order below a previous candle's low. So we have our swing low right here. And then a bullish candle. So because it's bullish, I think I might want to buy here. So let's put like a limit order, like, I don't know. Honestly, you could just buy it right here, because you could say this is an order block. This down candle right here is an order block, but no, this is just too nitpicky. Like, my way of entering will be put a limit under below a candle's low. So we have this three candlestick formation right here, bullish candle. So I would just put a limit order at 40.38 right here, right below this candle's low. You could get tagged in right here. Bam, it goes up, man. You gotta hold it for a good 2 hours. But honestly, dude, worth it. Because what do you have right here? Another swing low. Another swing low. Another swing low here too. So this one becomes an intermediary swing low. Okay. A lot of swing lows coming in here. Yeah, a lot of swing lows. Then it's like, if you're a seller, if you sold previously, you're wanting to see all these swing lows get taken out, and they eventually do. Bam, right there. So take partials, man. Take freaking partials. That's the name of the freaking game. So, so what else did I write down here? Yeah. So, yeah, this thing might have. Why would I have? Yeah, I don't know. I'm just gonna delete this off. So, okay, so here's a good one. Yeah, right here. Oh, this is at 4:40 a.m. though. But what do we have here? On the 15-minute time frame, there's definitely some swing lows getting taken out. So let's just go on the hourly just to see, because we got two buy positions. Yeah, so yeah, a lot of swing, even on the hourly. You got some swing lows getting taken out here. And it's 4:40 a.m. Let's go on the 5-minute time frame. So bullish closure following swing low. That's a buy signal, according to me and my trading strategy. I remind myself to take a little bit off of profit, and then I tell myself it's okay to take little wins because it manages your risk. I did note this one as a swing low right here. Right? So yeah, we got swing low. This is a swing low here too. But it's a weird one. The next candle goes below it, but it's bullish. Okay, so but then we form another swing low here and another swing low. So okay, yeah, this is why I bought it, because yeah, we got a swing low, 4:20 a.m., 4:25, 4:30 a.m. These three candles make our three candlestick formation, which is a swing low, and we're just looking for buys. So that's why we're looking for swing lows. And then, so we form the swing low, and then we have a bullish candle following the swing low, and it goes above the previous candle. So this is our candle we're looking at. Here's the low of the candle. We're putting a limit order at the low of the candle, and we're putting our stop loss at the swing low. Maybe we can give us a little bit more breathing room, but I don't want to do that right now. I want to have continuity in my trading rules and in my trading system. So we're going to put our stop losses at our swing low. When we live trade, say the spread is uh 0.1 points. Okay, so instead of 8.1 as a stop loss, let's just do 8.2 or 8.3, maybe even 8.4. It shouldn't matter. What really matters is that there's continuity. Okay, so yeah, swing low, cool. Put a limit order below the at the low of the candle, not below the candle, at the low of the candle. So we get tagged in right here. If you're too late, I mean it's 4:40 a.m. man, so you might not be able to trade. Looking at it at 7 a.m. 7 a.m. Yeah, man. Like I said, man, you honestly might as well wait until New York Open, because what do you have right here? Literally right at New York Open. 6:55, 7 a.m., 7:05. These three candlesticks provide us with a three candlestick formation. Now, the following candle is a bearish candle, but although it's a bearish candle, the fact that it traded higher above the previous candle, that's a buy. Okay, so we're going to take this low of this candle that went above this candle that created our swing low. It traded higher, so we're taking that as a buy signal. So let's go ahead, and this is the better trade. This is what we should do. Let's put a limit order at the low of this candle. Right at New York Open, man. If you're setting your alarm at 6:30, getting ready for New York Open, bam, man. Friday, perfect, man. Because on Fridays, what do you want to do? I want to get in and get out on Fridays. I want to scalp. I don't want to stay in the market for too long. It's Friday, man. People are trying to party. You know what I'm saying? It's how the market works. So, bam. You get tagged in here now because the next candle, it just is super small. It's just doing its thing. But then you get tagged in at 7:20. It dances for 20 minutes. You have 20 minutes now to, make sure that you're sizing correctly, that your position size is correct. You're giving yourself 20 minutes. I mean, the market is giving you 20 minutes here. There must be some news because this candle at 8:30 is a big candle. But because we got into the market an hour prior to the news, I'm holding on to this trade. And this is a 1-3, easy 1-3. I mean, hey, why not take partials at 1-1? Why not? You wouldn't because you want to wait a couple minutes after the news release, but whatever. So you don't squeeze out the 1 to 2.73 risk to reward that it gives you should you put your stop loss and size yourself correctly at the swing low. So maybe you take partials right here. That's fine, man. You're managing your risk. You're taking money, and that's what good traders do. In this situation, price just continued to go in this bullish direction. And hey, man, it's Friday. Let's not forget that. I like to get out early on Fridays. So hey, man, this looks like perfectness. I mean, you're out of the market at 10 a.m. Eastern Standard Time. Sure, it trades a little bit higher. Who cares? Who cares, man? It dropped afterward, man. So here's our trading strategy, man. Wait for a higher time frame area of liquidity to get taken out. So if sell side liquidity gets taken, and here's a picture of sell side versus buy side liquidity right here. I just looked it up on Google. So sell side is like a swing low, buy side is like a swing high. Okay, so if we're looking to buy, we're looking for sell side liquidity to get taken out. Got taken out down here. Okay, now we're waiting for a swing low to form during a good time. So sure, this is a perfect example on gold. You could trade. If you want to trade at 4 a.m., go ahead and do it. But I've been trading for so long, I think there is discipline in just waiting until New York Open. And I mean, yeah, sure, this is a cherry pick example, but would you rather buy right here or would you rather buy right here? Obviously, you would rather buy right here, ladies and gentlemen. I mean, just look at that price move up, man. I mean, if you're seeing this, um, yeah, you're calling your wife and your kids, and you're setting up plans to take a vacation. You know what I'm saying? That's that's just the type of uh, benefit. You just gotta be disciplined, man. I'm kicking myself in the face. I'm shooting myself in the foot. I'm doing all of that, man. But hindsight's 2020. Well, you can use hindsight to your advantage, man. I'm glad I got this on camera too. Um, because yeah, man, this is my trading strategy. Just simple as that. I mean, I want to keep it that simple, but I want to collect some data now. So I'm gonna turn the camera off. That's it for the vlog. I'm gonna do some more note taking. I'll put the football game on too, man. But you know, I might do some back testing during the football game, but I'm really gonna focus on getting some sleep here, man. That's the number one thing. So there you have it, man. Episode 3, DuzyDusty. See you guys in the next one in episode 4.